Aloha everyone, Joshua Hayes at BigWaveTrading.com. Back at the command center finally. Short vacation, and I made a mistake traveling on Thursday instead of the weekend. And boy, oh boy, I have learned that that will never happen again. From now on, I will be only traveling on the weekend, and it will be for a longer duration of time than this most recent trip. And I don't plan on doing that for at least 2 more years. I do not do well on vacations. A lot of interesting things happened poorly while on vacation. So I think I'm going to go ahead and take the hint and hold off on a vacation next year. So don't plan on me leaving anytime soon into 2020. That is the next time I plan on leaving Maui, as every time that I do, something always happens. And once again, that happened this time via luggage lost and TSA confiscating food and whatever. Anyway, moving on. While I was gone, oddly enough, I did not expect it, but it was good that it did. The market rallied the entire time I was gone. It made life a little bit easier, but still, due to all the family activities and going here and going there around Minneapolis and St. Paul, a lot of late updates. I apologize. That stuff's done. Back to normal, starting right now. So this is the video lesson for the weekend. Overall, look at the S&P 500. I want to show you we are rallying right into resistance levels. We're doing it on no volume, and since we're missing some volume bars there, let's just go ahead and pull up the ETFs. But QQQ, another V ramp. It's unbelievable to me that this is how the market trades now. It's very disturbing and just sad to see, because my beautiful green chart patterns that were so prevalent from 1998 to 2008 just are not going to show up when you trade like this. But the V-ramp moves are good for our SPY calls, our SPY puts, intraday trade of the days. These things are rarely moving anywhere from 20% to 100%, all the way up to 300% on the put side during these downtrends right here. But this is where I'm going to continue to focus, folks. As long as these moves are V-shaped and just totally wrong. Look at the volume on the downside. Huge. Look at the volume on the upside. Non-existent. Look at it on the downside. Huge. Look at it on the upside. Non-existent. Look at it on the downside. Huge. Look at it on the upside. Non-existent. This is the exact opposite of what you want to see. So as long as this continues, the status quo continues. Small, measured positions, tight, stops. Careful trading. Lots of positions for me. Doesn't have to be that way for you. But instead of 10 stocks, 10%, this is the kind of market where you want to hold 20 stocks, 5% of your account capital, most in each. But if 20 stocks is too much for you, then you're going to want to hold a high level of cash. And that's what was also interesting this weekend. Despite the market rallying, despite these V-shaped moves that you see in the QQQ, the SPY, and the IWM, somehow I went from being almost nearly fully invested at the start of the uptrend to being about 15% cash. So I'm right around 10-15% cash following Friday's session. I've updated my stops. I've made my sell orders. I've already entered my buy orders. So I'm good to go, but it's just strange. It's a strange market. And now with us being back to resistance levels, I'm going to be looking at the market to start wanting to pull back, especially IWM. But I mean, it goes for all of the indexes. You can just draw, press the wrong button. You can just draw trend lines from all of these, levels over. And as you can see, you just run right across the top on multiple things, whether it's a downtrend line on the SPY or a straight trend line on the IWM. Everything's rallying in resistance. So intraday I'm looking at puts. But with that being said, still looking for long signals if they trigger. Before we get to them, really quick, the high quality sell signals. SBO rolling over below its 50-day moving average in that 427 low a day. 50% sell signal since volume is below average and lower in the session before. So that's going to be leaving me with a 3% loss. DZSI is crashing below the 50-day moving average on huge volume and closing below the 4.4 low a day. And initial entries here, but I added a much larger position here. So I'm going to be leaving once my final stop hits. If you sell it today, you'll be leaving basically with about a 2% loss. But I'm moving my final stop to right below 953, 952, as I still had like one here and one here. These are being consolidated to right there. And with SBOW, I've now been knocked completely out, by the way. I moved my final stop to right there. I was knocked out of all of it intraday. If you're still long, though, on an end-of-day basis, half here, half right there, that low green BOP bar following our long signal. Since it didn't violate the first support levels, but since it's now lost green BOP again, that now becomes the final stop if you're still trading on an end-of-day basis. And then the final sell signal, already speculative, already warned everybody before going along due to how thin it was. It was just perfect speculator. Closing below the 3-day moving average on extremely strong, well above average volume with red BOP. That's a 100% full sell signal. I never moved my limit up, so I got long at about the price here when it pulled back right here. Very small position because, as you all know, as each day goes by and that limit order is not filled, we lose 10% of it each day. After 2 weeks, we no longer have a limit order on the books. So TIG, final sell, 2% loss. Now, the new long positions for Monday. CNC is the Cancelim quality long signal that was confirmed in the BOP scan. RCKT is perfect speculator scan. APLS was in my biotech, or excuse me, was in my IPO scan. So it's a biotech IPO. Always like those stocks. You know, those are always hot, hot, hot whenever they can move. But it was confirmed in two of my volume surge scans, with the one volume surge scan, the stocks that move the most on the, or the stocks that move on the heaviest volume of their past trading history. So only 20 stocks qualified for that scan today. APLS was one of them. And then I have one extremely speculative long that I'm not even going to go over. You're going to have to go look at the new positions page. It's extremely speculative, but it's higher quality, quote, quote, because it's perfect speculator quality. It's in my perfect speculator scan. I understand what it is. It's basically an option play because it's a warrant on the stock. With it being a PS name, I'll give it a shot. Small limited capital. But for regular capital, for normal positions, RCKT, new long position, pocket pivot point signal off the 50-day moving average following its earnings announcement this morning. Perfect speculator stock, not confirmed anywhere else. 1% of my account capital. Limit order 1819. First cut loss 1633, then 1589, then 1509, 1399. And once again, when I go long a stock with multiple stop levels, the stock doesn't move higher immediately and violates that first stop level, especially while losing catalyst, i.e. BOP going the wrong way or on heavier volume. I'm raising half to all of my remaining stops no matter what. But RCKT, 1% at 1819, use those three stop levels. And APLS, also 1% of my account capital. Normally would be 1% for IPO, 0.5 for the volume surge scan, another 0.5 for the price volume BOP surge scan for a total 2%. But it's a risky biotech. It only has an earnings per share rating of 1, so I can't call this a quote, quote, high quality IPO with all of this red in this chart. If this entire chart was yellow and green, especially with all of this being green, then sure, 2%. Why the hell not? Then it's got enough technical catalysts to agree with that kind of allocation, but with it being speculative, even though it's in my IPO scan, I would think the max you would want to put into this on my end, if you were me, is 1.5%. The lowest is 0.5%. The most is 2%. So I kind of met somewhere in the happy middle, the 0.5, 1.5. And the 2, you could do 1.25, but with the stock, with me using the kind of stops I'm going to be using. If you use this first stop level, let's say you go long APLS using 25.15 limit order like I am. If you just use a 22.54, sure, 2%. Put 2% of your capital in it. But for me, I want to go ahead and split it up. 22.54, a third at each level, 20.98, and then 19.23. But if I decide to go more than 1%, which I probably won't, even at 1%, the smartest trade probably, half here, 25% there, 25% there. Why? Because there's no green BOP catalyst. I mean, if the whole thing was green, then sure, a third, third, third. But with it being the way it is, half, 25, and 25. And then the final long position, CNC. This is the highest quality name of the bunch. It's very liquid, higher cap. The only problem is it's slightly extended from the 20-day moving average. So I want to respect the signals, the rules. So I want to get long CNC, limit order at the close, 114.44. It's not close enough to 50-day moving average that you can use the high of the day. First cut loss level right there, 111.35. Final cut loss level, the last green bop day, the last pocket pivot point signal day, 107.84. Now I made a mistake yesterday with the stock, TTOO. TTOO, this was my favorite signal out of them all. Don't love it, but it's my favorite signal. Look at all the green bop. There's almost no red bop, and it's an earnings winner, immediate earnings winner, follow through, intraday, hammer candle pattern on heavier volume with bop surging. Now, with it being that close to 50-day moving average, I should have used the high of the day. Even though it's slightly extended from its 20-day moving average, it's close enough to the 50-day moving average, and it's not extended from the pivot point area here, or, keep pressing the wrong button, or the pivot point area here. So I could have used the 715. Instead, I made a mistake, used 718. It got down to 710. Would have filled me at 715 had I done the right thing. But a big intraday reversal off the highs. Hopefully I can get filled at 715 over the next couple of sessions. I really would love to, especially if BOP can continue to build into that upper green to max green BOP echelon. So that's what I'm looking for. But a slight clerical error, not much. I only got 2 hours of sleep in the last 24 hours before I put this trade on. I obeyed the rules, but the rules have a slight, rule bending requirement. If the stock's not extended from the base that it's breaking out of or building, and if it's not extended from its 50-day moving average, and if it's earnings winner and not extended, which it's impossible to be because I would never chase an earnings winner above the earnings winner's date gap up high a day, you can use the high of the day. So that's what I should have done, 715. If that would have been the case, I would have been long with a small game in TTOO. But there's a slight lesson. Going back to CNC, this is not that case, as you can see, because while it's within the overall base structure, which means it's okay, it's a little extended from the 50-day moving average, so it's not. But back in the saddle, everything's looking good, everyone. The New York Stock Exchange advanced decline line hit a new 52-week high today, even though the market is nowhere near there. So even if we do back and fill from these resistance levels, my personal opinion is that the market is inclined to want to move higher here. Also, the IBD put call ratio jumped back up to 0.88 today, which means the crowd is still skittish anytime the market even remotely begins to sell off. All right, long video, but I wanted to make one long anyway after a week of no videos. I will see you back in the chat room Monday morning. If you have any questions, please post them below this video or on the website anywhere, or send an email to admin@bigwavetrading.com. Aloha.